Good afternoon, everybody, and welcome to this edition of our Ask the Experts. My name is Carl Capolingua. I'm the market analyst over here at Betmakers Australia, and it is a pleasure as really I throw over to you. You're in control of the conversation. You get to ask me about anything you'd like, and I'll give you a quick technical and fundamental. We'll do that after we talk about the Think Markets difference, which is substantial. $8 flat rate trades on your ASX shares, your own holder identification number, unlimited phone support, and of course no hidden platform or subscription fees for fantastic reasons why your next ASX share trade should be with us. And if you are new to the Think Markets family, join up and get trading before June 30. Your first 5 trades are on us as well. There are some T's and C's, so head to the website for further details. Really, that's enough of the formalities. Let's head over to you. We've got one question that's coming in already from Bippen on AGL. Is that the start of a rebound? You know, it could be. It had a massive bounce last week. We'll kick off by looking at the chart. Whilst we're doing that, I'm going to head over to my fundamental analysis tool here, which takes dozens and dozens of the various broker data out there, consensus data, puts them all together, stirs them around, and hopefully will help us make sense of some of the fundamentals. It's basically the best fundamental analysis I can kind of do on the spot without having to go off and spend hours and hours, doing analysis on a particular company. So it's suitable for the format that we have today. Okay, looking at the chart first up, well, it's a pretty well-defined downtrend. Let's start off with that. This huge sort of dark pink band that's heading down. I don't have the labels up there anymore, just keeps it clean when I have to snapshot these and send them to Ausbiz. But if we did have the label, it would say that, actually we've got them up here, they're labelled. So the long-term moving averages, if you're unsure, 144 periods and 233 periods, they're just the ones I like to use for whatever reason. Okay, they're the ones, in my experience, over many years of using them, tend to work the best, tend to highlight where prices, are resisted when we're in a big downtrend, or when prices, and I'm sure we'll find them, are supported when we're in an uptrend. AGL's not a great example. There's certainly some resistance there, and if we go back far enough, we'll see where it was supported. And often when we move below these levels decisively, the trend really does change. So we were in a big uptrend before that, and then we switched into a downtrend, and so on and so forth. But the flip side is, until we get back above this trend zone, for me, and just my personal style of trading, because I'm a trend follower, it's still very early days to get in. If you're a little bit more aggressive, well, really way more aggressive than me is probably the right way to put it, you might go on the basis of a change in the short-term trend. So the short-term trend, that's the 21 and 34 period exponential moving averages. Once again, just the 2 periods I find best summarise what's happening in the shorter term. And when we get that combination, the consensus of short-term versus long-term, I find we get the best trade. So when the short-term trend is up, long-term trend is up, that's when the best trades are there. And then we're looking for pullbacks within those trends. So if we were a trader who likes to go short, we would have had lots of trades in this system to the short side because of this well-established long-term trend, and they're just really waiting for the price to sort of interact with that short-term trend and then come down again. So to answer your question, Pippin, is it the start? Is it the start of a rebound? Hey, look, probably, possibly. The rebounds have to start some way, and generally they start with some really nice white candles. Having said that, we have seen this happen before. Let's check out the volume. Let's see what's going on in the volume. That's not the volume chart. There's the volume chart. Silly thing. I have to go back to AGL. Look, if it is a real sort of blow-off bottom, or if we're going to have a high probability that there is a big blow-off bottom here, we'd like to see it accompanied by a large spike in volume, and large would be quite obvious on the chart. It would just be just a really high sort of peak. You can see my hands now on screen. It would look like that in volume. You'd see a similar thing in volatility, and we're pretty close. We're pretty close here to seeing that. Here, not as much, but it's not bad. Yeah, look, the question is it the start of the rebound? Look, I'd say 50-50, definitely 50-50. Okay, when can you get into it? I think that's the more practical question. What do we want to see first? Okay, certainly I'd like to see this turn green at the very least. If we can't have this needs to turn green, and that could take a week or two of sustained price action, really above that. I'd say probably $9 level. Then we'd like to see some higher peaks and troughs, something that looks maybe like this coming in, or even something like that. It's not going to let me draw it because I can't go any further to the right, but you kind of get the idea. So a return to higher peaks and higher troughs. High peaks and high troughs tell us that demand is building. Well, the only way you can get higher troughs are a low point. Low points are caused where demand has come back into the market. The only way you can get higher troughs is if demand is building. Higher peaks are where supply has hit the market. If we're having higher peaks, supply is diminishing. And that combination of increased demand, higher troughs, and decreased supply tells you that there is big money moving back into this. And that's kind of giving you some confidence that, hey, with your little bit of money, you can come in and try and follow the big money. So there's a few things that need to happen. I think, yes, we've got some constructive candles. We've got some reasonable signals on the volume and the volatility there. But it's probably still early days for me. But it's definitely one I'm going to watch because I know lots of people are interested in it. It's been so bad. And there is, there's an inkling there of a little bit of a rally. Let's check out how AGL looks on the fundamental side of things. And just to explain some of the multitude of numbers we're seeing on screen, we've got broker consensus, so you can see what the brokers are saying about it. No strong buys, no buys, 6 holds at the moment, and 4 sells. So brokers aren't exactly over the moon with this one. Their mean target is 975, an upside of 1140, a downside of about 7. So if we go back to the target, where's 975? A little bit higher than where it is right now, maybe 6 or 7% upside based upon the broker consensus. So at least there's a little bit in it as far as they're concerned. We do have 10 estimates, so there are 10 brokers surveyed, and these are of the likes of Goldman Sachs, Morgan Stanley, JP Morgan, Credit Suisse, UBS, and so on. So, they do great research. Then each broker has an idea of what they think the revenue will be for the company over whatever period is that the column suggests. Income, EBIT, which is earnings before interest and tax, net profits, earnings per share, and so on and so forth. And then we can look at the growth rates that they're expecting. And this is the one I tend to look at the most. So what growth in earnings? And remember, markets pay a higher premium for earnings growth. And if we look at what they're expecting for FY21, we're looking at roughly a third of their earnings to be knocked off in this FY. And then for next year, another third, and really not until FY23 that earnings are starting to stabilise. And the average sort of 3-4 year growth rate is about 23% there. And really, this is where the fundamentals meet the technicals, isn't it? This is what's really fascinating and exciting for me. If you're listening, you know I like my technicals, but it's not because I ignore fundamentals. I started out in the industry as a fundamental analyst. I just found that technicals are a quick way to do things because the technicals reflect the fundamentals. There's a reason why the chart looks like that. It's because year on year, brokers have expected earnings to fall by about a third. Hence, the share price probably, give or take, needs to fall by about a third to justify a consistent valuation. So it's not screaming buy on the chart. It's certainly not screaming buy on the fundamentals at this point in time. Let's go custom growth off. And that just adjusts this to the average, and it's a very low, it's negative growth. I can't even price it because it's negative growth on there anyway. So I can't tell if it's cheap or expensive because my little valuation model down here requires growth. But even if I went 0%, it would be good value at about $5.60 Bippin, great value at $4.47. That's if we assumed a 0% growth rate, because at the moment the P is just too high, even after this decline. So hey, there's every chance this just keeps going down, And we've got a follow-up question there. This one's from Vivek, and maybe Vivek came in a little bit later to the presentation. That's fine. He's coincidentally asked the question: is it a good time to invest in AGL? So Vivek. The short answer is we looked at the chart and it's way too early on the chart. We've looked at the fundamentals and there's not a lot going on in the fundamentals as well. So the analysis that we've done this morning would suggest it is not a good time to invest in AGL right now. Hey, the future is the future, and we can't tell, but based upon the analysis we've done, the answer would be no. So thanks, Bipin, and thanks, Vivek, for putting those in. Let's get into a couple of the other questions that have come through. Okay, let's punch in CSL. Coincidentally, CSL was on, and it'll take about a minute to retrieve all the data. In the background of this spreadsheet, there are literally, if we go in here, you might actually be able to see what's powering this spreadsheet. So we're actually taking comparisons. Actually, I haven't even shown you this stuff, where we can actually compare the company we're looking at versus the top 500 companies. So all this data you can see retrieving. That's why I say we'll give it a minute, we'll come back. But then it actually starts to power some of these little charts that we have at the back here, which give us, I guess, trends. It's nice to see trends in various metrics. This is a downtrend here in enterprise value to revenue, and that's not a bad thing from ROM. That's actually a good thing. We'd like to see enterprise value to revenue falling. It means the revenue is greater compared to the value of the business, so that's good. And we've got various things here, but probably the most interesting one is the comparison tool, where it compares the stock in question versus the top 500 stocks, and it actually sort of ranks the stock. So we can see CSL's enterprise value to revenue ranks at 22%. So it is there are 78% of stocks in the ASX, in the All Ords, which is the top 500, which are better than CSL on that metric. Having said that, CSL ranks very, very highly on return on assets, return on equity, return on invested capital. It's in the top 8% of companies on that metric. Its average rank across the key fundamental metrics that I look at is 34%. Therefore, it's not highly rated by this model. In fact, CSL, very interesting. Look, if we have time, we'll put up AGL and check out AGL in the big picture as well. Hey, CSL's here. Let's check it out. Custom growth. Let's go off. Let's just assume the brokers are right here. And we will get sort of an average of about 8% growth going forward, which then adjusts what we think is a fair sort of valuation for it, and then we get some prices as to what would be good value. This demonstrates that CSL is grossly overvalued by my model. It's saying its fair value around about $117. Now, there's no way CSL is going to get there anytime soon. And it really is because brokers have historically really placed a very high premium on CSL's growth. So it's probably more like that, and then you're going to start to get, there you go. So I've kind of guessed it right, just from knowing and sort of having a feeling for these things. But, you know, brokers are assuming a growth rate for the next few years of 30% for CSL. And because of COVID, that's probably not happened. Now, historically, it has been the case, but because of COVID, that's not going to happen. So in my eyes, CSL feels very overvalued. Having said that, let's head to the chart. And this is probably the most important thing I'm going to say to everybody today. Who cares what I think? And don't take this the wrong way. Who cares what you think as well? And I know your mum told you were very special, and it's probably true. But when it comes to the markets, you're not that special. Hey, neither am I. It is totally irrelevant what we think. So we might think AGL is the best company ever. We might think it's really, really cheap down here. But who cares? Okay, if we buy it now, nobody cares what we think. All that matters is what the market thinks, and all that is going to happen is what the market does. So let's try and align our thinking with the market's thinking. Okay, let's put aside our ideas of what good value is and what bad value is, and defer to what the market thinks, because the market is smarter than us at the end of the day, whether we like it or not. Hey, the market doesn't mind CSL. I don't think the market is screaming that CSL is fantastically cheap right now. But certainly there's plenty of support around for CSL, as evidenced in the short-term uptrend. Look, the long-term trend is fairly indiscriminate and fairly flat. And if I zoom out, we'll find that CSL is probably about the same price today as it was, nearly a couple of years ago. Let's get to the point. If I had it, I'd hold it. I'd hold it on the basis that the short-term trend appears to be improving. The price action looks pretty good. The candles look pretty good. If I didn't have it, would I be buying it right now? Look, I have to say no on the basis that I think there are better valued stocks out there as well. There are stocks with great charts and great value, and while CSL has a reasonable chart, personally I don't think the value is there. So hopefully that answers the question for you, Ron. We have lots of questions coming in, so we'll keep moving. The next one is for DUB, which is Double Corporation, and this is a very interesting company. They do recordings, audio recordings for enterprise. and voice to text and things like that, if I'm not mistaken, John. But I'm not an expert on all stocks on the market. Apologies. Hey, again, doesn't matter what I think about the company. The market loves this thing. The short-term trend's amazing. Long-term trend's amazing. It is having some trouble around that $3 mark. If I move myself out of the way, you can see $3 is under there. And if you caught my article during the week on support and resistance and the psychology of support and resistance, where they occur, you would have read the bit I wrote about round numbers and how we often find that round numbers come into play in terms of resistance. So stocks get caught, they get stuck around numbers like, and you might not believe it, but grab a chart and go prove it to yourself. It's true. They get stuck around 1s, 2s, 3s, 4s, 5s, 10s. So 1's pretty important, but $2 is more important than $3. $4 is more important than $3, but $5 is more important than the even numbers. $10 is more important than $5, and so on and so forth. There are studies that have been done, and go and Google these, that show that humans have these fixations with round numbers. The other thing that's really important is doubles. Okay, so if we find that a particular stock spends a great deal of time at a particular price level, you will tend to find that when it doubles that level, it will also get stuck at that double of the level. And this is just human psychology. I reckon a great deal of traders, investors, got in around that $1.50 mark. How do I know that? Well, I'm not making it up. I can see. For about 6 months, the stock churned in there. That means a lot of people got out at that level, but a lot of people, therefore, by default, got in around that $1.50 level. Now, they look up and they go, geez, if this thing got to $3, I'd love to sell it because I'm doubling my money, and that I give myself a pat on the back and tell myself what a genius I am for doubling my money. And if it happens in 3 months, of course I'm going to do it, right? It's a no-brainer. So you've got a huge number of investors who think $3, if I got it real quick, is a no-brainer. And lo and behold, where do we stop? We stop almost exactly at double that consolidation zone. So for John, who's asked the question, $3 is an issue, and it could be an issue for a considerable period of time as the market deals with that supply that's inevitably at this level. Now, if we break above $3, then that tells us that supply has been dealt with. By definition, we have traded with that supply. We have had enough cash interact with that supply, those shares, to take them out of the market. The good news is they're in cash. They're in cash, patting themselves on the back, saying, what a clever boy am I. And when the stock starts to climb to 310, 320, they're going, why did I sell Dubber? I knew this was a great company. That's why I got into it. I can't believe I got out of it. The good news is they're in cash. We know there's lots of demand in the system already because that's how it got through $3 in the first place from the long-term holders who know it's worth way more. They're holding on for 6, for 10. And all that cash who got out at 3, they want to get back in. It helps push us to the next phase. Long story short here, if I'm an owner of Dubber, I'm definitely a holder. If I'm not an owner yet, look, I might look to buy pullbacks, just on the basis of the strength of the broader trends around that 260 level. Otherwise, I'd prefer to wait until we do break through that $3 level to give us that strong sign that the supply, that pesky supply from 150 is out of the way. Let's have a quick look at the fundamentals for Dubber. Look, it's going to take a minute to retrieve, so maybe we'll check out the chart of the next one while that's happening. And the next one is BET, which is Betmakers. Now, this is one I started covering when I first joined Think Markets back in the middle of last year. And this is just this little label here is just a reminder that I have covered it in Think Technical, which is one of the regular reports we put out. So at 54.5 cents, would have been looking pretty good there at $1.50. The recent price fall is because it's made a bid for part of Tabcorp's business, and the market, I'm kind of thinking, and basically some of the comments I've heard from analysts is that they've taken a big bite and maybe they're paying a little bit too much. So that's probably caused that big pullback. It's tough, therefore, for me to give you a really confident technical analysis reader because it's these are fundamental moves that come out of the blue. I mean, you could not have predicted, and the market could not have predicted such a fundamental development. And the market wasn't expecting it because it was in a beautiful uptrend before and then a vertical move down. Having said that, it has pulled back to the long-term trend zone, which we tend to find I'm not saying it's always the case, but we tend to find we do see bounces at these levels. The other thing that's probably working in its favour is it's back at that $1 level, and there'll just be this natural demand from the round number there. There's also we've also seen some support around that level from the past. So I think, look, if you've got it, it's probably worth hanging on to it on the basis that we could see a bounce from this level. If you didn't have it, I wouldn't be buying it here. There's look at the candles. The candles are too black. There hasn't been enough of a bounce really at that level to give me enough confidence to say, hey, this is a real bargain and I need to get in. There is a little bit of, remember we talked about AGL and the sort of the V shape you want to see in the volume and the volatility if we're seeing a really good low. And that's occurred, so that's interesting. We've had that big washout, but it hasn't been accompanied by enough price action to suggest that the big money is starting to step in and soak up that demand. So I'm a little bit concerned about that one, but maybe there's just enough in it to say hold on the basis that we could see a bit of a bounce here and you'll get better prices. Is it close to an RSI buy in my view? Okay, so just to completely answer Rom's question, they've asked whether it's close to a relative strength index buy and RSI. If we go into the charts here, and there's a bunch of indicators, and look, for interest, let's go insert. And the RSI just basically takes today's price and it compares where that price has been relative to a certain look-back period. It might also incorporate up moves versus down moves as well, but don't quote me because it's been probably 20 years since I investigated the RSI. And probably 15 years since I moved on from looking at it and to use other tools. So it's not a tool I use. It's not a tool I found to be useful in the past. So is it close to an RSI I buy? I couldn't say, unfortunately. But based upon the analysis I do like to do, Rom, the answer would be no, I don't think I want to buy it here. I'm more of a price action and trend follower. Okay, that's my style of technical analysis. And hey, over the years, you find something you like and something that you feel that works and you tend to stick with it. Let's have a look at the fundamentals for, Dubber. Okay, so look, the problem with Dubber is that it's not widely followed by the brokers. So there's not enough data. You can see, so this is Thomson Reuters data here. It's obviously a massive data provider, but they just don't have enough data on file. So unfortunately, John, without me now physically going off to the Dubber website, downloading all of the research reports and doing my own fundamental analysis, which I actively do, but obviously not in a half-hour session, I can't really give you much more than the technicals on that one. Apologies. I do get lots of questions as to, hey Carl, what charting package are you using? It's called Amy Broker. It's a one-off lifetime license purchase. It's got nothing to do with Think Markets. It's not a trading platform at all. It is simply an analysis platform. You need to pair Amy Broker, which costs you, let's call it $500 or $600, with a data subscription. The one I use is Norgate Data. And again, they do very separate things. Amy Broker is the charting package. Norgate just simply plugs the open highs, lows, and closes in there. It's what I've used for well over a decade now, embarrassing to say that's how long I've been around, and it's just what I'm comfortable with. Your Think Trader app has many of these features, but I can't say it has all of these features. Okay, I like this because it's also a programmable charting package, which means I can go in and create my own indicators and tools that I like to use. Okay, we are looking at Santos. And Santos, I think, looks good, actually. It's held that long-term uptrend. Pretty happy with that. I'm pretty happy with the candles. Look at all the white candles. We looked at Betmakers and we looked at all the black candles there. And the only way you can get a black candle is you open at a particular price and the sellers just keep beating you down, all day, and you close on the low. And the next day you come back, boom, and you open at what you think is a good level because, hey, the Dow was up 100 points last night. And then, the rest of the market keeps going up, and yet, boom, 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 your stock's getting beaten back. Hey, does this sound familiar to anybody? That feeling of, geez, my stock just keeps getting beaten back. I have a great start, and by the end of the day, it looks rubbish again. And then the next day, the market's up again, and yet my stock starts well and it finishes poorly. You know that feeling. I know you know that feeling. It's not a nice feeling, and why do you want to stick with a stock that so clearly certain funds are targeting to sell into any strength? That's kind of Betmakers right now. It's not Santos. Santos, I like those white candles. It's the opposite. Hey, we open, we go up, Even if the market's down, we're kind of open, we end up a little bit firmer by the end of the day. That's a nice feeling. We all know that feeling too. Stick with those stocks. I like Santos. If I had it, I would certainly hold it. If I didn't have it, maybe a pullback into this little green zone, wherever that ends up, sort of that 740 level is probably the place to get involved. But yeah, look, I'm happy as a longer term portfolio buy to stick with Santos. Let's have a look if we've got any Betmakers data. We've got a little bit. We've got two brokers here. Okay, got a mean target of $1.45. That compares with the current price of $1.02. Maybe they haven't updated those since the announcement. I don't know. We do have some earnings forecasts, which are astronomical. I don't think I've ever seen a stock forecast to grow its earnings by 2,500% before. I can put 51% in here, and it wouldn't actually help me. EPS is 19 cents. Really? Oh yeah, because of that 40 cents in there, which looks like an aberration, to be honest. Look, I'd have to check this one out and see what's going on, because it's looking a bit funny there. So let's say that we've got a bit of an outlier here, and look, they occur from time to time. There's not a huge sample of brokers to really make sense of that data, unfortunately. But it's not my data, so don't blame me. We might quickly look at Santos and we will head back to the chart. And I'm just mindful on time, so we might only have time for, say, two more, which is Woolworths and KMD. So apologies if you didn't get your question answered, but tune in for the next edition of Ask the Experts. Let's go to Woolworths. Oh, that's a nice breakout. Look, I haven't looked at the chart of Woolworths for a while, mainly because it's one of the most boring stocks in the history of mankind. And that's my personal opinion. Having said that, it looks pretty damn good. Look, I won't even look at the fundamentals, because we probably know what they are: big and boring and fairly stable with a reasonable yield and probably not ridiculously expensive. The chart looks great. If I didn't have it, I'd happily add it to a long-term super portfolio. If I was a short-term trader looking to make a quick buck, you'd have to use a CFD trade on it probably. But look, I'm happy to buy that one here. If I had it, I'd hold on to it. So that's an easy one. A KMD, which is Kathmandu, which looks really interesting. This is a chart I have looked at quite regularly. It looks fine. Short-term trend is up, long-term trend has just commenced. These two candles aren't great because it's happened in a pretty good market. That's frustrating, but not enough to suggest that this can't continue to the upside here. So look, I'd be happy to hold that on that basis. As to whether I'd buy it, look, the answer is not just yet. If I didn't have it, I want to see a candle that looks like this. So I want to see that sort of candle, and I'll show you where you want to see it. You want to see it sort of in and around this 150 level, and then I would be more comfortable getting in. Until then, it would be just a hold for now. But the overall picture is certainly improving. And Jackie snuck in Macquarie. Okay, last one, Macquarie Group. Looks fine. Yeah, I mean, a little bit of a short-term downtrend, but I like the candles. Look at the candles. All these white candles. So yeah, look, short-term pullback in a long-term uptrend. A portfolio hold. Longer-term portfolio hold. Short-term trade. I can't see necessarily a short-term trade there, but otherwise that one looks fine. We are just inching over time there, so we might wrap it. Was there a fundamental I had to talk to you about? Santos, perhaps? Yeah, Santos is a tricky one because we have had some tough times, but brokers are expecting a pretty decent bounce back in earnings. Look at that, 60% consensus forecast increase in earnings. Yeah, I don't know. I mean, Santos looks cheap, is I think the message there. So even if we go 12, this is too much. Looking like somewhere between good and great value, as far as I'm concerned on Santos. Okay, let's wrap it there. I'm going to head back to the slides. You can catch all of our other market news updates and in the market news section of the website. If you'd like, tune in to me on Twitter or the Think Markets handles there. I often put lots of charts out that way. The next Think Learning event will be the top 3 ASX mining stocks. So we're going to do one large cap, one mid cap and one small cap next week at this time. Ask the Experts on the 22nd of June. Tune in for that. And then a couple of other ones you can also register for there. The disclaimer before I leave you says that the content of this presentation is general in nature. I have done the analysis based upon my experience and the data that is in front of me. You now need to make your own decision about what you're going to do with that. analysis. We are a regulated Australian broker. We do have some products that could see you lose more than your deposits, so it is important you understand this disclaimer, or give us a call if you have any questions at all. It's been a pleasure chatting with you today. All the best for your trading until we catch up again. Bye-bye for now.